Margaret Lowe.
Good morning. Good morning, everyone. I am Margaret Lowe. I'm president of AtlanticLIVE, the team that brings the Atlantic's journalism to life on stages across the country. And we're delighted to be here with you today and to welcome you to Building for a New Age, where we're going to talk about affordable housing, or actually the lack of it. Rents are rising faster than income. Many people in the middle class are priced out of buying a home. Segregation and discrimination based on race, on age, and ability leave many unable to find housing in the first place. And across the country, more than 500,000 people are homeless, and that number is on the rise. The stories behind the statistics are pretty painful, and the subject is complex, and we also know that there are no easy fixes. But we hope that you leave here today with a deeper understanding of the challenges and some new ideas about the best way forward. As we get underway, I want to take a moment to thank our underwriter, Genworth. Today would not be possible, Genworth, without your support of our journalism, and we're enormously grateful to you. Thank you so much. We have a magnificent lineup of speakers today, government leaders, advocates, scholars, and an extraordinary audience, too. Among those of you in the room, we have leaders from policy, advocacy, business, healthcare, and journalism. And we'd love you to be part of the conversation, too, so we're going to leave time for your questions after each session. And we also hope you'll join the conversation on Twitter at AtlanticLIVE, and for that, use the hashtag AtlanticHousing. We have a full morning, so let's get rolling. Our first session is Government's Role in Home Ownership. For that, it's my pleasure to introduce Mark Calabria. He's Director of the Federal Housing Finance Agency. And here to lead the conversation is journalist Kathleen Cope. Kathleen, the floor is yours.
Thank you, Margaret, and good morning, everyone. Welcome, Director Calabria.
Oh, thank you. It's great to be here.
So Fannie Mae and Freddie Mac, your agency has been regulating them since they were brought under federal control after the financial crisis in 2008. And the Treasury Department last month released a plan to hopefully get them back standing on their own 2 feet. There are experts, though, and many in the American public who go, well, you know, things have been kind of going okay. Things have been fine. They aren't engaging in the pernicious activity that they were, that led up to the crisis. So what's the rush? Why not stick with the status quo?
So let's kind of peel back the onion a little bit. Let me first say, I think if I could just paraphrase President Kennedy and say, the time to fix the roof is when the sun is shining. We do have a good housing market today. We have a pretty strong economy. So to me, if you're going to make these fixes, it's easier and probably better to do it now than to wait till we hear a crisis. I am somebody who believes we haven't repealed the business cycle, we haven't repealed the housing cycle. I'm not certainly forecasting any sort of downturn, but I think the reality is you and I will live to see a downturn in the housing market. Fannie and Freddie today are approximately leveraged 500 to 1. No financial institution at that level of leverage will survive a downturn in the housing market or the economy. They will fail. So for me, the first objective as a safety and soundness regulator is to get them to be safe and sound. That's kind of like, you know, in the job description.
You say you're not predicting a downturn, but I did listen to a talk that you gave at AEI, I guess was a week or two ago, and it was a little bit scary, I have to say. You said you saw warning signs, a lot of things that we saw before the housing crisis in 2008. You said cultural issues haven't been fixed. What are you seeing? What hasn't been fixed, and how concerned should we all be that another crisis might be looming?
Well, I think we should always be concerned that housing markets go up and go down. And so, you know, when my friends ask me whether they should buy a home, my first question is, well, how long do you plan to be there? You know, because again, the amount of time you may be there is how much you might gain appreciation. And again, the cycle turns pretty quickly sometimes, and so you can actually see pretty big drops. So I do think that when we get people into homeownership, we should do so with a thought of, is this sustainable throughout the cycle? Or is this really just, okay, you're going to ride it on the way up, cash it in and get out? That's not, to me, sustainable homeownership. Sustainable homeownership is getting somebody in where they can stay in. And again, I would, on a bigger level, say my philosophy as a regulator is to hope for the best, but to plan for the worst. And if the worst doesn't happen, that's great. But if the worst does happen, I think it's important for us to be prepared. And we are seeing a lot of the same practices. I mean, for instance, Fannie and Freddie's footprint in investor homes is as big today as it was before the crisis. And we all remember, those of us who've seen The Big Short or remember the stories of the person.
Or lived it. I mean, you were at the banking committee. I was covering it at the Bush White House. We were in the thick of things.
And, I will say, I remember 2006, 2007 being pretty regularly told at events like this that prices never go down and, there's nothing to see here and Fannie and Freddie are very safe. So for me, a lot of it starts to sound a little deja vu. Right. So maybe I'm a little, once burned, twice shy, if you will. But again, we have these things happen. I'll say one of the things that I know that made me popular on the banking committee staff is I always gave our new staffers a thick list of savings and loan crisis material to read and would say, this stuff happens. We need to be prepared for this.
When you talk about, though, that now is the time to fix the roof when the sun is shining, I hear implicit in that a belief that there will be some level of disruption when you fix this roof, such that it can only be done in fair weather, a strong housing market like we have. So how disruptive will this be?
So I hope what it ends up doing is minimizing disruption. So the first and most important thing we do is build capital. So I think it's fair to say that if we're in a down housing market or a down stock market, not a lot of people are going to be interested in buying equity in Fannie and Freddie.
Right. And you've started with that. So $45 billion is what you said you can go up to.
So delighted to say in the 6 months I've been there, we've doubled the capital at Fannie and Freddie. They're no longer 1,000 to 1, they're just 500 to 1.
Right. So it's not enough. What do you
Far
have to
from
hit?
it.
What do you have to hit?
Fannie and Freddie are, they're multi-trillion-dollar institutions. Freddie is about the size of Citibank, for instance. They represent a core part of the financial institution. These entities are the core of our mortgage market. They're simply too important for us to gamble with and not regulate them in a way that's safe and sound. So to me, the other institutions that are similarly systemically important need to be regulated in the same way. So to me, Fannie and Freddie are just too important for us not to regulate them appropriately.
What I was interested in hearing more about was what you discussed Tuesday at a hearing, testified on the Hill. And some of the lawmakers there were just a little concerned about the profit that would occur, with the retention of the earnings that you're allowing, that it would end up hugely benefiting hedge funds. And you said at the time, you said, quote, I very much am on the record over the years as saying, in 2008, what we should have done is wipe out the shareholders. If the circumstances present itself where we have to wipe out the shareholders, we will. So under what circumstances would that happen, and how would you accomplish that?
It's spelled out in statute, so it's generally if they become insolvent. One of my frustrations with the 2008 crisis was we had a number of mechanisms, whatever the institution, whether it was AIG or GM or Fannie Mae, where this is what you're supposed to do when an institution is insolvent. And there was an attitude that was very bipartisan that said, let's find ways to go around the normal processes to resolve failing institutions. And to me, some of those were extra legal. And of course, that's why a number of institutions have had 10 plus years of litigation. Fannie and Freddie aren't the only ones who've been litigated for 10 years over these issues. So there was a mechanism in law that would have very cleanly wiped out the shareholders. You wouldn't have 10 years of litigation, would have rehabilitated these companies and put them out in the marketplace. Perhaps I have a great comfort in that because I helped write it. But it's a model we know that works. In fact, it's Title II of Dodd-Frank. This is what Dodd-Frank says it's going to do to Citi and Wells and all of these institutions. So again, we have a framework. The FDIC's done it for decades. It's the law. I believe we should stick with the law.
Fair housing advocates are not only concerned about the issue I just mentioned that many in the committee were, but they're also worried about the too much freedom for Fannie Mae and Freddie Mac could start to lead to higher mortgage costs and then increasing difficulty in getting mortgages, in particular for lower income Americans. So can you guarantee us right now that at the end of this process that mortgages will not be higher, that mortgages will not be more difficult to achieve?
Would you like that guarantee to be implicit or explicit?
Let's explicit it in writing, maybe.
So let me say, first of all, my primary responsibility is for the safety and soundness of Fannie and Freddie. And what I'm sure of is if Fannie and Freddie fail, that access to credit will be reduced because of that. So for instance, Fannie and Freddie were the largest participants in low-income housing tax credit market before the crisis. When they were about 60% of that participation before the crisis. When they failed, they exited that market. That stopped a lot of affordable housing production because they pulled out. So to me, the most important thing we can do to make sure that Fannie and Freddie are there to support the affordable housing is to make sure that they're safe. It's just like when you get on the airplane when they tell you, in the case of emergency, put your own oxygen mask on first. This is what we're trying to do. And again, my concern is I often hear suggestions of, yeah, I know the foundation to the house is really cracked, but let's go ahead and put that second, third floor on anyhow. We need to fix the foundation. And that will make everything else stronger.
So no guarantee.
I am an economist and I know better than to try to forecast the future. I feel a high degree of certainty. I said it in my confirmation hearing. I'm absolutely certain that the 30-year fixed rate mortgage will be widely available and affordable by historical standards when I leave. I have no doubt that that will be the case.
No doubt. So how will the government protect that 30-year mortgage? Because it's interesting when you look at the plan. There are two contradictory items in there. It says the 30-year mortgage would be protected, but then it also says long-term mortgages would possibly remain available without government support.
Well, there are a lot of government mortgages today without support. If you're in the jumbo market, which most of Washington, D.C. is, there's no guarantee on that mortgage necessarily. They're widely available. In fact, they often are cheaper than GSE mortgages. So again, we have a mortgage market. Much of the rest of the world provides a mortgage market. But again, what I'm trying to do, and I guess I should certainly emphasize the administration's plan is the administration's. Right. I'm an independent regulator. What I'm trying to do is fix Fannie and Freddie so they can perform the role that they've always performed. And again, it's so critical to keep in mind the importance of Fannie and Freddie and the Federal Home Loan Banks that I regulate is to be there in times of stress. And they can't be if they themselves are broken.
But again, how do you protect that 30-year mortgage?
I think we'll be able to do that by fixing Fannie and Freddie to provide the credit there. So if we build more capital, that creates more confidence in Fannie and Freddie. That allows them to operate throughout the cycle. We really did. You go back to 2009, you go back to 10, you go back to 2011. Fannie and Freddie pulled back. They focused on protecting themselves because they were insolvent and failing. And if we can help them, and we see this across financial institutions, whether it's banks, insurance companies, GSEs, the ones that are well capitalized and well regulated, when they go into a crisis, they continue to support the market. The ones that are on the brink of failure pull back.
Have you seen any signs that the private market is ready to provide alternatives? Because when you look at the idea theoretically of competition, of creating these other entities, I mean, right now, first of all, that would take an act of Congress to issue a new charter. I know you're asking for that ability to do that yourself, but even so, then a new competitor would have to raise tens of billions of dollars, would have to establish a reputation on the national stage, the equivalent of Fannie and Freddie, and then have an attractive rate of return. I mean, is that not going to take years?
Well, we're not going to find it if we don't offer it, right?
Okay.
So, until we can get to that point, I really will emphasize, the economics I learned. I have a PhD in economics, whatever that's worth. In the economics I learned is that if you want to bring prices and choices and innovation, it's really got to be competition. And if I could use an analogy, when I was in grad school, a lot of what we talked about was the breakup of AT&T, Ma Bell. And if you remember, Bell Laboratories at that time was the most innovative place in the world. And all you heard was, well, if we broke up AT&T, where would all that innovation go? I feel quite confident in saying if we didn't break up AT&T, all those great phones you have in your pockets would not be like they are today. I think we've been more innovative on telecom since the breakup of AT&T and bringing competition. And you see that today. I mean, Fannie and Freddie dominate the landscape and they stifle innovation that would come from others. And so again, I think a competitive landscape will be better for consumers.
And you see signs that the private market
I do
is ready?
see signs of that. And again, like I said, if you look on the margin on the high dollar loans where the mortgage market, the jumbo, you can get a jumbo mortgage. You've got securitizations today that are privately done that have GSE eligible mortgages that go on private securitizations. But one of the things we're trying to fix, I've been working with CFPB to fix the so-called qualified mortgage rule. That's one aspect. You have a number of rules where Fannie and Freddie are exempt from them. So my view is I want Fannie and Freddie to be successful, but I want them to be successful because they have good management, they have good execution, they have a good business model, they're regulated well. I don't want them to be successful because they don't have to play by the same rules as everybody else.
How important is it that you work with Congress on this?
Really
right now, you're proceeding to do what you can on your own. And in the hearing on Tuesday, you said you wanted to work with Congress. So
Absolutely.
how do you think that Is that going to move forward? What's standing in the way? And if you don't end up getting action in concert with them, what are the risks of continuing to proceed on your own as you are?
Well, let me preface, nothing I'm doing is anything other than what I've been directed to do by Congress. So often, there became this myth, because it is a myth, nothing in the statute says you don't release from conservatorship unless Congress approves. I've never heard of the FDIC asking Congress for permission to release a bank from conservatorship. I was on the Hill when we created this. There were debates about congressional triggers. Those were rejected. The statute says I have two choices. I rehabilitate them, fix them, get them out, or I take them in the receivership. Endless limbo is not in the statute. Permission from Congress to release them is not in the statute. So I do want to be clear. I'm not going to wait around whatever the issue is for Congress to tell me to do what Congress has told me to do.
Before we go to the audience, I'd like to talk a little bit about affordable housing. And the Treasury plan has a couple of items that mention that. It says it recommends your agency take administrative action to come up with, quote, more efficient mechanisms for Fannie Mae and Freddie Mac to achieve the required affordable housing goals. And then it also calls on Congress, again, needing congressional action, to pass new laws to replace those goals, quote, with a more efficient, transparent, and accountable mechanism for delivering tailored support, close quotes, to lower income rural and then first time home buyers. I mean, you have said you want the government to play a limited role in the housing finance sector. It sounds like this Treasury plan is designed to do just that.
I think the Treasury plan on the affordable housing goes, and let me also say, it's important to have government partnership across the spectrum. So, I've often talked about my 3 L's of land, labor, loans. I have I have oversight of the loans, but if we don't fix, for instance, land use policy in this country, you can throw all the money you want at it. If you can't find a carpenter to build it, and you can't get the permit, and you can't get the zoning, it doesn't matter.
So you're saying a lot of this is on the local level?
Absolutely. We all have to work together. This is simply not the responsibility of our government. It's the responsibility of county government, state government. It's everybody's responsibility to work together because so many of the obstacles are there. Pivot back to the question on affordable housing. Interestingly enough, historically, the way it's been set up with Fannie and Freddie is their housing goals are income-based, but the way that they have developed products have been predominantly on credit-based. And so, yes, of course, borrower credit and income are positively correlated, as we economists would say, but they're not perfectly correlated. And so what you actually have today is you may have higher credit, low-income borrowers subsidizing higher income poor credit borrowers. And again, the goals are based on income. And so trying to have a more perfect fit between income and the actual goals, I think, is important.
And that won't end up excluding too many lower income Americans.
That will not. In fact, it will make sure that the subsidies that are provided, the support that's provided, and of course, this is to support the entire market, of course, but it's also to make sure that the carrying out of the goals is more consistently aligned with the statutory requirements.
All right, let's go to our audience for questions, and we should have mic runners, so if you would raise your hand and stand up and identify yourself. Okay, well, maybe you guys, okay, we have a question right here, gentleman in the glasses.
Gonna apologize with the lighting. I can't
Yes,
always see who you.
Hi, Mark.
Okay,
It's Paul Leonard with the Housing Policy Council. In trying to create more of a level playing field to lay the groundwork for possible reform, how much progress do you think you can make on access to the GSE's data, more transparency on data sharing, licensing, whatever you think would be possible? Thanks.
I think there's a lot that can be done here, just like some of the big tech firms sort of have an entrenched market position because of the data they control. Fannie and Freddie have a very entrenched market system because of the data they control. I've actually hired an advisor who's my senior advisor, Lynn Fisher, who does my economics and statistics. And one of the things I've tasked Lynn with is how do we make sure that the data that we can have and share that's protective of borrower privacy. We will do nothing that ever jeopardizes borrower privacy. But how do we make sure we get more of that data out in the marketplace so that more informed decisions can be made by all market participants about the risks and characteristics in the market?
Okay, another question? Gentleman here.
Hi, Sam Gilbord, National Apartment Association. Saw it in the Treasury plan, but can you talk about how the GSEs will consider mortgage acquisitions for properties in rent control jurisdictions?
Good question.
So, maybe after I fix everything in Washington, I'll think about going to Albany or Sacramento and fixing everything. It's not my objective, not my intent, not my responsibility to fix things at local level. I will try to be a bully pulpit when I think we can move things in the right direction. We are going to take whatever the state and local policies that happen into account from an empirical standpoint. And so where I'm going with this is, so if something is done at the local level that affects, for instance, the value of a property, because perhaps it affects the discounted future cash flows of that property, then that affects the underwriting. But this is across the board. Anything that impacts the underwriting that affects the property value is going to affect what you underwrite it at. And that's how it all enters. And it's an empirical question. For instance, a number of studies have found that rent control actually ends up that less people enter the market. Well, if that means less people enter the market and rents go up, property values could go up. They could go down. We're going to let the data drive that.
All right, more questions? Okay, thank you.
Thomas D. with Capstone. In addition to the GSE's regulatory capital rule, which you're working on right now, the GSEs have statutory capital requirements.
Correct.
I was wondering if you could talk about the significance of those rules as it relates to the decision to end conservatorship.
Well, I will say that since we are in the middle of a rulemaking on the capital rule, I can't go into details. I will say I hope to be able to say within the next 2 to 3 weeks whether we will repropose the rule or not. It's quite a complicated rule, and in fact, I would say...
Could you explain it?
Sure. So to go back to my earlier point about the 500 to 1 leverage, that equity cushion that any company has is really that protection between insolvency or not, failure or not, protecting creditors, protecting taxpayers. And so to me, and I think this is true for some of our largest financial institutions, it was certainly true for Fannie and Freddie, that lack of capital is really what triggered their failure. So making sure that Fannie and Freddie have appropriate capital. Now the risk-based capital standards, you often have these leverage standards, which is here's your assets, here's your capital you hold. The risk-based capital standards are often done on a sort of bucketed basis of, this is this asset, it's this risky, you hold this much capital versus this. And so a lot of that drives the choices and decision making at any financial institution on what kind of activities they will engage in. And I want to make sure we have a level playing field. One of the reasons that Fannie and Freddie were able to dominate the market is because they were required to hold so much less capital against everybody else. So from a very level playing field, equality under the law, equal treatment, if you will, I believe anybody who has a federal charter who holds a mortgage should basically hold the same capital as anybody else who holds that mortgage. And so that, if you will, the industrial organization of mortgage finance is not simply driven by who gets to be the most highly leveraged.
All right, well, Director Calabria, thank you so much for joining us and for
pleasure.
clarifying what is a very complicated issue. Thank you.
Thank you.
Up next, for a session about housing discrimination, please welcome Lisa Rice of the National Fair Housing Alliance, Melvina Ford of the Equal Rights Center, Andre Perry of the Brookings Institution, and Sarah Mickelson of the National Low Income Housing Coalition. Here to join them is journalist Susan Salney.
Well, good morning again, and thank you for being here for what I think is a truly urgent conversation about discrimination in housing. I'd like to begin with one distressing fact about the big picture, and that's the homeownership gap between Black and white Americans, and that it is wider today than under the Jim Crow era when segregation was legal. So, Andre, you've done some work in this area. I'm hoping you can help us understand why.
Well, the black homeowner, white homeownership gap is lower than it was during the passage of the Fair Housing Act in 1968. So it's at around 43%, 41% given, 40% giving whatever metric you want to use. And certainly people will point to the recession. But as we know, we're in a state of full employment, the economy is booming, and the black homeownership rate has not rebounded in the same way as other groups have, particularly among whites. And so we really got to stay focused on the discrimination that's occurring not only in the housing market, so you certainly have discrimination in lending practices, in appraisals, in real estate agent behavior, but but you also have to look at discrimination in the cities at large. Black people are concentrated in cities, and in those places, and I mentioned about full employment, which is certainly, we're seeing record lows in terms of unemployment. But when you look under the hood and you see black employment rates, they're double that of rates. So blacks have less buying power. But I just want to stay focused. The reason why the Fair Housing Act was passed in 1968 because of the discrimination. These gaps really show some relaxation on enforcement of discrimination throughout the housing process. And I know Lisa wants to chime in because Lisa is probably the expert in this area.
Lisa, please.
Well, I really appreciate, Andre, all of the research that you do because it's so informative. And one of the other things for us to think about is the fact that for over 300 years of American history, all of our policies, well, the majority of our policies, our housing policies, our lending policies, were race-based. They were designed with racial animus against people of color, and they were specifically designed to support our white brothers and sisters. And so what we did, as Andre pointed out, when we passed the Federal Fair Housing Act, what we said was, on a going forward basis, we're not going to tolerate discrimination anymore, but we're not going to do anything to fix the structural inequities, the systemic barriers that are the apparatus, that are the foundation of our housing market and our housing system. And so as a result, we didn't do anything to eliminate residential segregation, as Andre pointed out. We left residential segregation intact. We left all of the other systemic bias and the discriminatory systemic apparatuses that we are challenged with today. We left all of that intact. And so that is why today seemingly neutral policies applied throughout the marketplace will manifest discriminatory outcomes.
This brings us to something called the disparate impact standard. It sounds like you were describing that. HUD under this administration is seeking to gut a number of Obama-era rules and protections, and one important one is the disparate impact standard. Can you explain what it is and why that's important?
Yeah, certainly. So disparate impact is basically unintentional discrimination. So it is the application of a policy or a practice, and you apply that policy or practice uniformly in a consistent fashion, to all consumers, but the application of that policy has a discriminatory effect in the marketplace. So one example, I can give you an example of a case that we brought involving insurance redlining. Insurance companies adopted a policy whereby they said if your house was built before a certain date, in some of the cases it was 1950, in some of the cases it was 1945. So if your house is built before that date, we will not give you insurance, or you cannot get quality insurance. You could get a residual inferior policy, but you cannot get quality insurance. And we found in cities like Chicago and Detroit and Toledo, many cities across the nation, again, because of residential segregation and racial steering, African Americans and Latinos disproportionately live in older housing stock. So it's important to note that these policies weren't tied to the condition of the house, it was tied to the age of the house, and that manifested discriminatory outcomes. And so many policies that we see employed today manifest those same discriminatory outcomes because where you live matters. Where you live affects every single thing about you. If you give me your address, I can predict your credit score, I can predict your insurance score, I can predict whether or not you're a homeowner, I can tell you your chances of being incarcerated, I can tell you your health outcome. If you give me your address, I can tell you how long you're gonna live, because place in America is inextricably linked to opportunity.
And I will say, place is inextricably linked to people. We devalue places because we devalue black people. One of the research projects I did, I explored price differences between a majority black places and those where the share of the black population was less than 1%. And we found after controlling for crime, after controlling for education and all those things that homeowners look at, we found that homes in black neighborhoods are priced 23% lower than homes in white neighborhoods. That amounts to about $48,000 per home, about $156 billion lost in essentially equity on the homes. And we know where that $156 billion goes. It goes to education. It goes to infrastructure. It goes to people whether if they want to move to another community or not. So we're robbing people who are doing everything required of them of the American dream, robbing them of the opportunities because they're black.
Right. Among the things HUD is proposing is to strip transgender protections at homeless shelters. That is, to allow a shelter to reject someone on, say, religious grounds, even as they're accepting federal dollars. So another question is, are fair housing laws effective at all for LGBTQ Americans?
Well, the ERC has been doing what we call testing work. It's investigations using a method we call testing, sending folks in to apply for housing that mimic a certain protected category. So we've been doing a lot of work in the LGBT space, particularly looking in places like Virginia and Florida, to see if we are seeing discrimination against LGBT folks as they're searching for housing. And we are seeing it. The unfortunate thing is there are some jurisdictions, a lot of jurisdictions in the United States that don't interpret the Fair Housing Act to cover LGBT applicants. So we have mainly focused on how we educate people that discrimination is happening, and also working with housing providers, because housing providers are business people. They understand that there is a market out there, and they want to be able to rent to as many, most of them do at least, want to be able to rent to as many people as possible. So there's value in actually taking that data and giving it to housing providers and telling them that this is happening on your front line. You need to train your people on your front line to not engage in discriminatory behavior.
And I'll just add on to that, if I can, to talk a little bit about the rule and the weight of it. This rule would allow shelters to deny transgender people who are experiencing homelessness from accessing those shelters. And we know that this is a life and death issue, literally, because transgender people who are unsheltered are at much higher risk for violence on the streets. And so this is a completely unacceptable and cruel rule, and we, with our partners, will be fighting back on it.
Fighting back, right.
Absolutely.
Just a reminder to the audience that we'll be coming for your questions in a moment. But first, Melvina, the Equal Rights Center has done a lot of work on discrimination against disabled people. So I want to ask you about the building codes. Are they really successful in helping the disabled navigate housing?
No. So the ERC started an initiative about 15 years ago because the disability community was telling us that housing was really the biggest barrier for them. And we started doing investigations of large multifamily housing providers, apartments, condominiums around the country. And 15 years ago, it was hard to find a building anywhere across the United States that didn't have significant accessibility barriers for people with disabilities. So again, we started confronting housing providers with that data. Some of them wanted to be educated. Some of them we ultimately had to sue. We just recently resolved, within the last 2 years, the largest case out of all of those investigations. And as a result, that builder is making 85 buildings across the country more accessible for people with disabilities. The other thing we've done is engage those housing providers, though, and try to meet them where they are. So we've tried to go to the places where they are actually getting educated. We've tried to build tech tools. One thing we are hearing consistently from them is we don't understand why when the folks come in to check for building code violations, they're not also checking to see if there are issues with accessibility. So we've tried to start to meet people at the building code level, trying to figure out where are they getting educated. We've spoke to large groups of architects because we understand that if you build it the right way the first time, it's going to be a lot cheaper first, right? So we're trying to help meet them them there. We have always done kind of written publications for housing providers to figure out how to build their buildings in compliance with the Fair Housing Act. And one thing we heard was that people were taking the books out to building sites. And so we said, well, what do you have in terms of apps? And they're like, well, we've got iTunes and iPhones and stuff like that. So we took that information and we essentially put it in a real-time app so that they could check while they were on site to see if they were actually in compliance with the accessibility requirements of the Fair Housing Act. So it's really, I kind of put businesses and housing providers in 3 different buckets, right? You have those that are doing the right thing, and you want to work with those people and uplift what they're doing. And then you have those that would do better if they knew better, and those are the people that you want to train. And the ERC has developed a number of online courses to meet them, because a lot of them do their training online. And then there are the people who really just don't care. And those are the people that you have to sue. Particularly if they are large housing providers, focusing your efforts on those folks is really important, because it sends a message downstream to all housing providers that you have to build housing that's accessible.
You recently had a suit against one of the largest apartment builders in the country. What happened with that suit?
That was the one that we actually resolved, and all of those buildings across the country are now going to be accessible. I mean, one thing I do want to say about just the aging of the population, I know you guys are going to be talking about that a little bit later. I sat in a mediation with one of these builders, and they looked me straight in the mouth and said, well, people with disabilities can't afford our apartments. And my response was, I have bad knees now, so you're about to have like a tsunami of people who need accessible housing. And they're saying, like, by the year 2050, like 1 in 3 people are going to live in a home with a person with a disability. So, builders who ignore this market are going to do so at their financial peril.
Right, our population is aging.
Yes.
And the number of people who will be developing disabilities as time goes on will only be on the rise.
It's a tsunami.
Yeah.
And housing is a civil rights issue. Everyone needs affordable housing. I know housing has been the main wealth building device and throughout our history. But now we're at a place where it's clear that people deserve to have a home, to anchor themselves in communities. We see all across the country people being pushed out, renters being pushed out because there's not enough affordable housing. Prices are skyrocketing. We're critiquing many of the presidential candidates' proposals. For instance, several of them use formerly redlining districts as sort of a vector for their policies to create more home ownership for Black and brown Americans. And particularly Black Americans. But what they didn't check is Black people don't live in formerly redlined districts anymore. It's actually, we did recently released a study last week, me and my colleague David Harshbarger, that showed that it goes Latinos, then whites, then Blacks who live in formerly redlined districts. And Blacks only that folks who live in redlined districts only are 8%. Blacks are only 8% in that population. Really? So we got to figure out new ways to address age-old discrimination.
Right. Mm-hmm. Well, speaking of affordable housing, Sarah, what's the #1 thing a city can do to encourage more affordable housing being built?
Well, every level of government has a role to play in addressing the shortage of housing, and local governments are in the best position to address moderately priced housing by reducing land use and zoning barriers that drive up costs by restricting the supply of housing. But it's really important to know that even if local governments were to really relax their local land use and zoning regulations to increase supply, there still would be a significant shortage, a severe shortage of housing for the very poorest households. And that's because there's this tipping point between what the private sector can build and what they just can't. It doesn't make a lot of sense for developers to build housing that's that deeply affordable because the rents they take in wouldn't be enough to keep the property going or to build it in the first place. And so that points to a really important need for robust federal resources to build deeply, deeply affordable homes to the very lowest income people. And we see that trend where the shortage is greatest at the lowest end. We see that in rural, urban, suburban areas. We see it in every congressional district. It's truly a national problem that's really not being addressed at the scale that's needed.
Do you have any faith that it will be addressed?
Well, I'm really pleased to see so many presidential candidates are putting out really bold, innovative, large-scale housing plans. We can critique them. There's lots to critique and give feedback on. But this is really the first time I've seen presidential candidates talking about housing and putting it out there on the campaign trail.
It is a really positive step.
Yeah, absolutely.
I'm going to turn to the audience. We have a mic runner. Are there any questions right now? Yes.
My name is Barbara Moreland, and I work with the affordable housing in Arlington, Virginia. The question is, one, getting to the point of being able to purchase a place, whatever they may be renting, because rent proves you can make a house payment, but it doesn't necessarily help you to have that down payment. Are there ways in which all that previously paid rent could be applied as a down payment?
Well, that's a great question. One of the challenges that we face is the increasing unaffordability of housing for middle-income Americans. So teachers, firefighters, police officers cannot afford to rent a housing unit, an apartment, in the areas where they live. And that unaffordability is growing. What that means is that it's reducing people's ability to save for a house. Now, there are some programs, and some programs have come under a great deal of scrutiny for the way they have taken advantage of people. So think land contract deals, land contract programs, which were at one time in America primarily the only way that African Americans and other people of color could access housing, because redlining and lending discrimination was so robust. But those land contract programs were abusive and they were predatory, and they took advantage of people, and people really could not sustain the homes that they were seeking to purchase. But there are some lease-to-own programs that are run by a nonprofit, community-based and community development organizations that are designed to support consumers. And so you can, if you're dealing with the right organization, you can operate a program and take advantage of those lease-to-own situations where a portion of your rent is being saved in an escrow account to build up a down payment for you to be able to purchase the asset.
I'd love to add on to that too, just to show the connection between the shortage of affordable housing for deeply poor families and the rest of the housing market. So I mentioned before, well, I should have mentioned before, that the shortage for the very lowest income people, that's the only population in which there's an absolute shortage of housing. And as that grows, there's two main effects. One, the very poorest households are paying 50, 60, 70% of their income on rent. It means they have less money for putting groceries on the table or paying for their medical bills. But it also has an impact on more middle-class renters who want to save for a down payment. So you see all of those very poor households living in housing that would otherwise be available to middle-income renters, and that pushes up housing costs too. So until we address that shortage at the low end, we'll never see that correction in the market because we're not addressing the market failure.
You don't get there unless the largest landlords in our country, meaning the municipalities, take bold steps in zoning for increased density and affordability. Mayors and city council folks can do this. But it will come from the demands of the people in those cities to make that happen. But another just key point, we do need a different type of way to measure credit. There is what's mentioned in the initial panel, that many of our credit scoring systems are just antiquated. We have plenty of people who pay bills on time, but because they receive low incomes, they can't afford many of the homes in their locales. And so, yes, we need mayors to do their part. We need new credit scoring systems. And we need to eliminate discrimination, and this gets to your other point, in the job market. Because if people can't afford a home, all these programs won't necessarily take hold.
See, in talking about housing for low-income folks, I think it's important to also highlight the Housing Choice Voucher Program. The ERC has been doing a lot of work on preventing source of income discrimination. And we have this voucher program out there, and what we're finding is there are a lot of people who can't even use their voucher.
That's right.
And in particular, one of the goals of that program is to get people to use their vouchers in high-opportunity neighborhoods and places where they can get a good education and they have good access to good grocery stores and have better health outcomes and things like that. One of the things that we've been seeing is just rampant discrimination against voucher holders in their attempt to actually find available housing in the district, but really even around the country. One of the things we would like to see, obviously we're focusing on kind of larger developers in wards 1 and 3, places where there are higher opportunities, but there are a lot of kind of small micro landlords out there that have good places for people to live. In most places, you have to get a license to actually rent out units. That's a perfect opportunity to educate these landlords about their obligations to comply with source of income laws, and not even just source of income laws, but frankly, all housing laws. If you're going to rent a unit, you're a business owner, you need to be educated about how you're supposed to be renting that unit and making that space available for low-income families.
I will say also that this issue of housing affordability is starting to impact more members of Congress, maybe people we hadn't seen as being housing advocates before. So we're seeing bipartisan proposals to use federal dollars to pressure local governments to address their land use and zoning regulations. And we're seeing legislation that looks at how do we expand, how do we look at credit, and how do we make sure renters are being able to play a role there. So I think this is starting to be an issue where we can see more broad bipartisan support for, and we're really hopeful about that.
Well, we touched on it a bit earlier, but let's go back to the 2020 candidates. Who's got the best housing plan?
Nobody.
Well, I will say this, and I mentioned this earlier. I appreciate, as you mentioned, the effort to address historical discrimination, but they can't rigidly use the same tools. Audre Lorde said you can't use the master's tool to break down the master's house. And that's true. You can't use FHA, the Federal Highway Administration highways. You can't use formerly red line districts. Because time has passed and because of migration, because of gentrification, because of a number of issues, people are now spread out and discrimination impacts different communities differently. And so we need a whole set of tools. The problem with the presidential candidates, they have these universal sort of categorical policies that don't necessarily fit. You actually need a menu of different policies to address the various circumstances in which discrimination manifests itself in the various cities. And that's what I'm not seeing. No, I represent Brookings. I'm nonpartisan. I just want to put that out there. I do like, although she uses formerly red line districts, I like the depth of Warren's policy. I like the depth of Buttigieg's Douglas plan because it addresses multiple things. This is not just about housing discrimination. And it is about discrimination at large, but there are things we can do in the housing market that we've relaxed upon, and we have to reassert moving forward.
And if I could just add, many people know Pamela Patton-Node, who is the former Deputy Secretary of HUD under President Trump. In the 2016 election, Pamela crisscrossed the country and met with every Republican candidate to talk to them about just these issues that we are talking about, to get them to adopt a housing platform, a housing agenda, and not one did. So the one thing I will say is in this presidential cycle, housing is very much on the table. Yeah. All of the candidates are talking about it, and that is going to force the conversation in the national debate come this election cycle.
I think we have to leave it right there. Thank you very much. I appreciate your expertise on this issue.
Thank you. Thank you for having us.
For a session produced by our underwriter, Please welcome Rohit Gupta, President and CEO of Genworth's U.S. mortgage insurance business, and David O'Leary, President and CEO of U.S. Life Companies at Genworth. They are joined by journalist Soledad O'Brien.
Hey, good morning, everybody. So let's jump right in. This panel's called There's No Place Like Home, and so I'm curious, and I don't want you to think a lot about your answer. Home, what does that bring to your mind, just personally speaking, off the top of your head?
So, Soledad, for me, home is a big milestone. Being an immigrant, I bought my first home outside of Cincinnati, Ohio. It was at a point that I was already working in the US. I'd had 2 different jobs in 2 different cities. I was volunteering in the community, but buying my first home was just kind of a big milestone. It meant putting down roots. It meant assimilation. It meant that sense of belonging that nothing else had established up to that point. I was telling one of my friends a story about buying that first home and for the first time mowing the lawn. Growing up in New Delhi, India, I didn't have a lawn growing up. And buying a home and actually having a lawn outside of Cincinnati and mowing that lawn just gave me that sense of belonging and gave us a starting point of a life that we were about to start.
And how about for you?
Home's an interesting thing for me, Soledad. I would say it's a continuum. As a child growing up, we had a horde of children, and so it was a lot of activity and noise in the house and running around.
How many is a horde?
We started at 6, and now we're at 5, so we had a number of Irish children running around making a lot of noise. My mother was trying to corral us all the time. I recall vividly when my wife and I bought our first home, it was excitement and absolute fear. That night before you sign the mortgage, it's like, what did you do? And then I'm living today with my elderly mother-in-law, and my father recently passed, but I remember with elderly parents, home to me on that continuum gives comfort and stability. So home to me is not just a single event, it kind of rides throughout life and it continues to evolve.
And in fact, in the back where people were able to write about what home meant to them, that word stability comes up a lot. Safety, like this idea that home
Right.
is gives you sort of this feeling of safety as a physical structure,
Yep,
and also kind of a
absolutely.
metaphysical structure as well. So then, if you move to Genworth as a company and as an organization, what does home mean for the organization?
So in the mortgage business, it means working with our lender partners, working with different constituents to put people in homes and actually have them achieve this dream of home ownership that they were always hoping for, that they were always aspiring towards. And our role is to actually put people in homes who do not have 20% to put down. And that accumulating that 20% in US, even with a good economy, takes a long time. For an average family, that's 7 to 12 years to accumulate that 20%. And right now, with home prices going up, that number keeps going up and takes longer to accumulate. So a company that can actually help people get into homes and actually achieve that dream of home ownership is a big deal. And second thing is, I think it starts putting people on the right path on wealth accumulation. Even as recently as this year, if you see the difference between people who own a home, their net worth this year went up 15%. People who actually do not own a home, their net worth went down 5%. So not only did they start off at different places, people with homes had higher net worth, their kind of wealth accumulation in life is dependent on them buying a home. So having people bridge that gap is a big deal.
And not just home prices going up, but the price of everything, college prices
Exactly.
going up, which influences how much you're going to be able to invest in a home.
Absolutely.
Pushing it back. You talk a lot about home as this investment and how it correlates to security in life overall. Obviously, it's a massive financial investment, and if it's not secure, if you can't stay in your home, you have problems down the road as well.
Yeah, I guess I would say from my side of Genworth, which is the opposite end of that spectrum from Rohit. Rohit helps people get in the home. For the life companies that we're responsible for, we're trying to keep people in their homes as they're aging. So we're dealing with people at the older part of it. So we're dealing with long-term care events. And when you start to deal with long-term care events, the thing that we've learned is that people actually want to stay home as long as possible. And so at Genworth, we're working with them and we're offering services to them that will help them modify their homes to go in and help them stay in their homes longer so they don't get hurt. And it's simple things. We can send a nurse practitioner in to do an assessment of a home, and it can say, move that area rug. Take appliances from up high down lower. Move laundry to a different place, put grab rails in, so you can actually protect that investment. And it really comes down to what we're trying to do is help people stay in their homes as long as possible, because it is a sense of comfort. It is a sense of security for people. More important is that independence. And when we think about what Genworth does on the insurance side, what's fascinating to me is it's one of the questions on the back wall is how much does it cost to stay in your home for home care? In the Washington, D.C. area, we put it up there, and the answer is the $57,000 number. That's a year. And when you think about really what does it take for that investment to prepare for that, one of the things that we're concerned about as we think about this is our country is not a country that has planned very well. We don't save for retirement. We hear that regularly. We're not saving for retirement. We're not planning. You think about preparing for long-term care events, which are happening more and more frequently. Only 7% of the country actually has some form of long-term care planning insurance in place. And so we're trying to raise that awareness so that we can actually help people to do that, because if our average duration of a claim is 4 years, you're talking a couple of $100,000, and a couple of $100,000 on top of that investment that Roe had started with someone as, and they're growing through there. That's a pretty significant amount of money.
And sometimes people see that number and they run. They're fearful.
They do.
They put their heads down and don't want to address it and think about how they're going to pay for that $60,000. In New York, the number's even higher.
Correct. Correct. And the benefit of insurance, much like what Rohit does, is insurance is a pooling concept. So you're not alone. So you have a choice to either save for yourself to the best of your abilities, or you can use insurance as a leveraging factor. And the goal of an insurance company is to get this large pool of people and spread that risk among many people. And so that's the advantage of insurance. And so we're trying to work to raise the awareness. We're trying to get it out there for people so that people are aware of this. We're working very hand in hand with our federal government here to try and change some regulations to try and get people to understand really what's ahead of them.
You're engaged as well on the policy front, both of you, really being specific about tools. Those questions, in fact, come off of a publication that you do consistently that really gives tremendous, and sometimes, I think it's fair to use the word, kind of shocking insight into things that I think people don't think about with their viability and future in their home.
Absolutely. So I think from a housing perspective, we approach it in two different ways. This morning, Director Calabria talked about housing finance reform. So we play an important role in making sure that all constituents understand that as you think about a housing finance reform, how do we make sure that those low to moderate income borrowers do have access to low and sustainable cost mortgages. And at the same time, we actually spend a lot of time talking about first-time home buyers. If you think about the housing market right now, housing market across the country is being carried by first-time home buyers. These are home buyers who stayed on the sidelines during the downturn, and right around 2013, 2014, they finally felt comfortable to come back in the market and start buying homes. And we have a report that comes out every quarter that gives visibility into how many first-time home buyers are coming to market and how are they behaving. For low down payment mortgages, which are mortgages less than 20% down, 80% of first-time home buyers use some form of low down payment mortgage option.
I got that right. I might be the only one.
So 70% of you got that right. And that is, you were one of them. And that is something very important. If we actually do this housing finance reform and do not get that dynamic in the right place, we could end up disrupting a very healthy part of the market, not giving access to people who are trying to get into homes, and also has an impact on economy.
How about policy-wise, thinking about what the future of services in the home will look like? Because that's really going to impact what people are able to do and stay in their home.
It is, and Genworth does an annual cost of care study, which you were referring, which was the board on the back, and that's across the country, so you can actually go to genworth.com and look at the cost of care as to what it will be in your particular area. But what we're finding is home care in particular is raising in the vicinity of 4 to 7% this past year, whether it's the different types of services that are in there, which is the fastest growing cost for us, is home care. People wanting to stay at home. Why? Because as somebody said earlier, we're in a full employment economy, and providing home care services is more and more expensive. So what we're working with the government on policy practices right now is we're trying to give people access to buy long-term care insurance using other vehicles. We're with things like defined contribution plans, our 401k plans, if you're in the teacher marketplace, the 403B or 457 for the government people, is to tap into some of that tax-deferred money to help defer the cost of long-term care. And can we actually work with legislation to do that, as well as trying to raise overall awareness across the country? You know, everybody thinks about the government as the safety net. Well, there's a big misnomer around the government being a safety net. Medicare does not really provide long-term care services. It provides you some services when you go home to recover, but it does not provide long-term care services. Medicaid, people, is the thing that everybody refers to. That's the payer of last resort, right? That's for the destitute. You've spent down all of your assets, and now you're on the government doles for that. When you project that out, the impact on state budgets and on federal budgets is enormous. So we are also working with the federal government to try and create a public-private partnership so that the individuals would be responsible for the first slice and the government would be responsible for what we would call catastrophic or the added slice afterwards. So we're working with them to really try and develop this public-private partnership at the same time.
As we started, it's a very emotional issue that requires people to take a hardcore look at sort of the numbers around it. David and Rohit, thank you very much, guys. I appreciate it.
Thank you.
Bet.
Here to discuss aging and housing, please welcome Deborah Pierce, author of The Accessible Home, and Rodney Harrell of AARP. To lead the conversation, please welcome back journalist Kathleen Koch.
Rodney and Deb, I am so excited to discuss this topic. I was just in Hutchinson, Kansas, visiting my 84-year-old mom. She lives on her own in a home there. She downsized from a home in Colorado in the beautiful but very remote mountains where she had lived with my dad before he died. And now she has easy access to grocery stores, drugstores, doctors, all those things. And she's even started visiting a senior living facility in town for just in case the time, if that time comes that she can't manage on her own. But I understand she's the exception. She's not the rule, that most Americans aren't really thinking ahead, aren't making these plans, and aren't ready to make those major life adjustments as they age.
That's right. Unfortunately, many of us have what's sometimes called the Peter Pan syndrome and don't think we're ever going to get old. It makes sense to think ahead and think about the options you might need to meet your future needs. One of our earlier panels talked about the number of people with disabilities in the country. Roughly a third of households will have one. But that means you may not. You may have difficulty getting upstairs at some point. You may stop driving at some point. And many times I've seen people go into a community, buy a home that's their dream home, and eventually becomes their nightmare because it limits them and limits their ability to do things once something shifts in their lives.
Now, Deb, I understand you're an architect who not only thinks about making homes accessible for people of all abilities and the aging, but you've written a book about it, really terrific book. And what I think is fascinating in here is that I see it goes so far beyond the grab bars and the gadgets that people often think about when they want to make a home accessible, and they end up making it look institutional. And these are not at all. Talk to us about designing with aging in mind. And I understand you have some pictures to show us.
Yes, I do. I wanted to add something to the previous point, which is that it takes a few years to implement a strategy. And so when people wait until they can't live on their own or don't feel safe or comfortable, that's a little late. So in my work, I really try to bring that conversation in much earlier, and I'm finding that people are actually initiating that conversation too. So things are starting to change. I've got a few images here from the book. So for example, this is how an accessible home doesn't look institutional. And this woman has everything within reach. The counter is lower. It's 29 inches for her. You can see a shallow drawer dishwasher so that she doesn't have to reach all the way down to the floor. The refrigerator opens in the right direction. The wall oven to the far right is at the height of the countertop, so she takes things out. She can put them down someplace nearby, and then she's got drawers down below. So all of her storage is within reach. People will look at this and they may say, is this something I can do in my house? Certainly. It's about smart rather than bigger. It's about compact and having the right appliances. Another image here. Here's a bathroom. You just see a little extra room around the toilet so that a person either can transfer from a wheelchair or have assistance to get up and down.
It's so beautiful.
Yeah, you've got a sink with seated space, knee space open below. The tub is across from the sink. You can see the reflection in the mirror. So this is an accessible bathroom. The space for grab bars, even though they're not installed there, but it's built for later addition of them by putting blocking in the walls. Okay, here's a house that has both stairs and a ramp. And so...
But what a pretty ramp.
Lovely, lovely, yes.
I want that in my front yard.
This doesn't really broadcast that someone with disabilities lives there. It's, you know, a delivery person bringing a dolly, or a person with a carriage or a suitcase. So
stroller.
What works for people who are older also works for people who are younger. It's just a different way of thinking about the home. And
Rodney, you want to comment about any of this?
Absolutely. I think that's spot on, that these options we're talking about are fit for someone of any age, of any level of ability. It gives you the kinds of features you might need without looking institutional. That's really the thing, that nobody wants to live in an institution. So using concepts like universal design really help bring that out. And I love that these are pretty designs that also work for folks.
Yeah, and this is just simply think about how a person who's seated can take advantage of the view. So you have open railings system underneath the deck on the porch here. It's lower windows, not just more windows. You think about crank hardware rather than a double hung window. It's a different way of thinking for the building industry and for the design industry. Some of the things that we take for granted are really not accessible. We need to relearn or empathize with what it looks like, what it feels like to be living with a disability.
You know, Rodney, it's these images show us how Americans can increasingly age in place, but I think we're also talking now about aging in the right place and about livable communities. Explain to us what that means.
Right, there's many ways to think about a livable community. I think the simplest way is to think about options, that housing options, transportation options, the kinds of community features and services that your relative now has, having those within range lets you choose the type of home or setting you want to be in. And that's the idea of a livable community, that you have your needs met. And so, you know, when we talk about the features in a home, the ones we've seen, for example, or making communities where people can walk and the like, you know, it's a change from many of the ways that we've thought about communities. I mean, for 4 centuries, we've been building communities in this country with the idea that there's not that many older adults among us.
And we're all driving everywhere.
We're all driving everywhere since the 50s. That's how we've been building things around the car. And you know, that's not the case for many of us. Men outlive their driving years by 7 and women by 10 on average. And so, you know, we're all going to get to that point where we need some of those options. And so the idea that we can start changing the way we do things, looking for the future, is the way that we can build communities that work for all of us.
Deb, I wonder if you could talk to us about how personal this process is. I know you mentioned a minute ago that your clients, you urge them really to think ahead, because the process can take a long time from design, concept to design to execution. But also, when you're designing these homes, you're literally designing it around a person's physiology, right? I mean, ideally, an accessible home should fit you like a well-tailored suit.
Yeah,
right?
I want to talk about the difference between accessible design and universal design. So accessibility has one definition from a zoning and legislative standpoint, which is about wheelchair users. When I was writing the book and in my work, I discovered that it's really, if you can't use the spaces that are there, then they're not accessible to you. So for people who are blind, for people who can't hear, people who have cognitive decline, what does it take to be inaccessible? What is an accessible bathroom for someone who's deaf? These are the kind of questions that I was asking, and all of my clients have these kinds of disabilities. So when we're working with an individual homeowner, we really can tailor the house to their needs. What is their reach range? Do they have long arms? Are they sitting high? Are they standing? Are they short? Are they tall? Are they heavy? How do they need to function? But I think universal design, which is many of the people here are involved in the multifamily housing space, is to anticipate the wide range that people have in abilities, and to make sure that you create not only options for where you live, but options. Do you have standing or sitting when you're working at the kitchen? Do you have assistance or not? When you're in the bathroom, do you use a shower? Do you use a tub? I think the more we can create places that work for people with all abilities, the more universal we have our designs. So you think about people who can't see and who can't hear, benefit from the same kinds of visual cues in the environment, the ability to have an open plan so you can see what's going on in the next room. You don't have to shout or walk to the next room and find out where people are.
Rodney, I understand that it's 90% of aging Americans, when you talk to them, that they want to stay in their homes, but that only 1% of homes are really conducive to that. And then we also know we're talking about a population that's often on a limited income. So could you describe to us some other alternatives that we might not be really familiar with, other options when it comes to senior housing that people might start thinking about being able to access in the future?
Sure, and you know, I always like to say people are amazingly adaptable, and they'll figure out how to make situations work. But you're right that we don't have the housing stock that matches our needs. There's certain things we can do within communities. We've been doing a lot of work on accessory dwelling units, bringing in your backyard or attached to your home another unit that might serve for you or for a caregiver, or really adapt your property to meet your needs. There's options of shared housing where people are actually moving in together, the Golden Girls model people like to talk about. But that's something that's growing in concept, and even varieties of it where co-housing units are being built where multiple people are coming together. You know, these are some of the burgeoning models in addition to the assisted living facilities and
I love the one of seniors retiring on university campuses, in dormitories. It sounds really fun.
And you know, these are the kind of options, new and innovative options we need to find to take the housing infrastructure we have and make it work. That if what's really fulfilling me is my university affiliation and the ability to be on campus and maybe catch a game, you know, that really
go to a frat party.
Go to why not? You know, that might bring that social connection that I want, right? And that might be the most important thing to me. And having that option in my community lets me meet that.
Deb, let's talk a little bit about cost. When we look at these homes that you design, how affordable are they? And is there any kind of assistance to people who want to make their homes more accessible? Any kind of federal, state, local assistance? And if not, you know, how can we, you know, is that something that's in the works that people can be lobbying for?
Oh, good question. People usually have to dig into their own pockets and take out home equity loans, and really it's a struggle. I don't think there are the resources financially. I don't think there are the technical resources. People don't know where to start. They don't know who to call in. There's so many people in the various building industries, designers, builders, design builders. Who do they call? Where do they begin? So I think that this is an area for improvement. How does somebody even know what kind of funds or grants might be available? So for many of my projects, my clients have particular medically determined improvements to the home, and so if there are any accountants here, I'm not sure whether this is, you may have different thoughts on this, but if we can identify the medically necessary improvements and break out those costs, then at least they perhaps could be a deduction on their expenses. And I say to talk to your accountant about this.
How does it affect the value of the home then once you make it fully accessible?
If you make it accessible correctly, you make it in a way that's incorporated into the design and it's beautiful, then I think it's adding value, because you're not only making improvements, you're increasing the population that is interested in potentially buying that property.
But you never seem to see it on the MLS listings. It's not like you can search an accessible home, right?
You can't. You can find a 2-car garage or a 3-bedroom house, but you can't find a house that's accessible. There is a lot of room for improvement on the realty market, I think, for realtors to understand what it means to be accessible or universally designed.
Yeah, I'll just mention that there are a lot of things we can do to help this. I mean, some places are experimenting with rehabilitation tax credits that may help defer some of the costs. We can expedite permitting for homes that might be built with some of these features. We can do things to kind of help the market create these options that people need, because it is a change in the way of thinking for a lot of folks. And so we need to think about our future selves not just our present selves. And so helping goose the market a little bit helps with that.
Yeah, I'd like to add something. I recently read in the New York Times that something like 77% of the property in cities around the country are zoned for single family. So it's illegal to put in a multifamily or apartment building. And zoning has to change. There needs to be a groundswell of understanding that this is something that's going to serve our communities in the future and keep them healthy. We need to counteract the NIMBY, that attitude that comes up when someone wants to put in a multifamily housing development. So, yeah, I think there's a lot of room for improvement.
One of the other panels mentioned this 2 panels ago, the silver tsunami that's coming. I mean, what is it? 10,000 people hit 65
every day.
Every single day. And by the 2030s, people over 65 will be greater in number than those under 18 for the first time in American history. So how are we going to accommodate? I mean, if only 1% of homes are conducive to aging in place, how are we going to accommodate these numbers? I mean, do we have a senior housing crisis coming?
Well, I think we already have one. And I don't like to think about a silver tsunami in the sense that it's an impending crisis. We're all getting older, and we've got a crisis already, frankly, where we don't have enough of these options met. And so we've talked about a few pieces of it here, but the real answer is that we have to fundamentally rethink the way that we're building our homes and communities. It's going to take changes to our existing homes. We've talked about home modifications. There's over 100 million homes in this country already. We've got to make those fit our needs. We've got to start thinking about building new homes differently, adding some of these concepts of universal design and other types of features that might serve us better. We need to start building communities that give us options if we're not driving, and making sure we have housing that fits different types of people near the kinds of things they need. And that takes decisions from us as individuals as we're choosing things to demand these kind of things on the market. It takes changes in supply from those that are building and shaping communities. And it takes the public sector to start putting the policies in place that helps make these things happen, makes them easier to have, and in some cases maybe give incentives to do things the right way. I mean, we have to serve our future selves and not be as crisis-based as I think we are now.
Let me add to that. I think we need to have an education system, and certainly for people who are in the building trades, that they understand what universal design means. I see when I've talked to educational groups, I find that occupational therapists are on the front line of this, and they often don't talk to architects and vice versa. So more medical and architectural or design collaborations.
So really raising the awareness level.
Right, and then you see industrial design programs are very much on board with universal design, but not necessarily architecture and landscape architecture and city planning.
People get in their silos. We have to get across the silos. As individuals, we're impacted by all of these professions, all of these people. We're living our lives in these ways. So all of these kinds of pieces of our lives should go together. The transportation is not separate from housing. The way something's built is not different from the way that we're using it or the way we're interacting with people. All of those things come together for us in our lives. So all of our disciplines and all of our fields need to appreciate that and work for us.
Well, let's go to our audience for questions, and if you would just identify yourself and then move forward. We have a question right here in the front.
Hi, I'm Brianna from Leading Age. I have a question about housing modification. Some states have grants for that. Mm-hmm. Do you see that expanding for universal design in the future?
It's a great question, and it's encouraging that it is happening in some places. And I think so. I mean, I think as we've talked about the aging of the population, we're seeing more and more legislators and others understanding that their populations are growing and they're not doing enough. And so as we go around the country and talk to folks, we're starting to hear more and more questions about what we can do. And so that's one of the options in the toolbox. So it's not, I wouldn't say it's popular now, but I think in the coming years it will be, and hopefully it will be.
And I think these options, when they exist, need to be more widely publicized and recognized.
Mm-hmm.
Yeah.
All right, more questions.
One
here.
Oh, sorry. This is Margaret Lowe
ahead.
from HUD. I have, on the home modification piece, I mean, I've been going around to different programs in the country who are, that are implementing home modification programs. One of the things that hasn't been mentioned is the prevention of falls and the cost to our medical system of that prevention. Would anybody like to speak to that
Great
For example, we visited Capable just earlier this week out of Baltimore.
That's right. I think universal design seeks to avoid injury rather than just to mitigate injury once it's occurred.
Yeah, and the falls prevention is a huge thing. I mean, falls change your life. That it can often, especially as you're older, lead to a series of events that are health challenges and lead not only to expensive things on the health side, but limiting your ability to get around and use your home and the like. And this gets to something I just mentioned briefly earlier, which is that we often currently make crisis-based decisions. We wait for the fall to happen. Then we say, oh, I need to make some accessible design changes and shift things. Well, how about we, in the first place, avoid the falls, right?
What are some of the preventive measures design-wise, Deborah?
Non-slip surfaces on floors. I think many flooring tiles are not chosen with the basis of their coefficient of friction as a factor. Good lighting so that the pathway is clear. That could be step lighting. It can be just being attentive to how stairs and exteriors is in the whole path of travel within the house. There are a lot of nice little fixtures that tuck into the wall that just light up the walking surface. Safety in the bathroom. Bathrooms are a source of most accidents in the home. So how do we make a bathroom safer? It's all hard materials.
Is that where most falls occur?
Yes, yes. 6% of visits to the emergency room related to accidents at the home are falls in the bathroom. So when you think about all the other things that can happen with fires and sleeping and tripping on wire, I mean, that's a fall. So outlets where you need them, often having them high enough up so that people can reach them rather than always down at the floor. The reason the outlets are where they are is because in the old days, that's where the height of a hammer. So they would always know where to look.
That would also benefit is flood-prone areas. I do a lot of disaster work, and if you only had your outlets higher, if you've ever been through a flood, when the water goes over the outlets,
and I think
your
also
electrical system is toast.
A lot of
safer.
built-in, so that you don't have portable furniture that's kind of in the way that somebody can trip over. That's also good for people who are blind or have visual impairments. They know where to find things. It's always there. Yes.
But one thing about the bathrooms and kitchens and even the outlets, when you're doing a remodel of those spaces, and people love to have pretty bathrooms and love to get those fancy granite countertops, well, why not think about having an open design that you can get around, adding some of these changes we're talking about that allow you to use that space if you did have something to happen in the future. No matter what your age is, you should be thinking ahead.
Rodney, Deb, thank you so much. Really great discussion.
Thank you.
Thank you.
And now, please welcome Daryl Fairweather, Chief Economist at Redfin. Here to lead the conversation, please welcome back journalist Susan Salmi.
Daryl, thank you.
Let's
start with the big picture overall, and that's the decline in home ownership. Why are more Americans renting now than ever before? Is it fair to say that it's a financial necessity and not a lifestyle choice?
I think that most Americans still want to own a home. We've done surveys on this, and it still is this aspirational thing. It's the American dream, but homeownership has become really unaffordable. The homeownership rate peaked in 2004, right before the housing crash happened, and that was a time when lending was easy. There were subprime loans, which had problems, but it meant that more and more Americans had access to credit and could actually become homeowners. Since the housing crash, there's been a lot of reforms. Some of them have definitely been welcome. It makes us in a safer place in terms of our economy, but it also means that only people that have like perfect credit can get access to homes. And what happened is that when home prices bottomed out, only a certain kind of American was able to take advantage of that. And since then, home prices have shot right back up. They're above where they were at the peak. And people who are just now getting their footing, like millennials, they graduated into the worst economy and are just now starting to feel secure in their jobs. They may be looking to become homeowners and are seeing that prices are so sky high, it just seems so unattainable.
How high? 70% over the peak, the last peak?
It depends on how you measure it, because you have to take into account the fact that mortgage rates are actually really low right now and incomes have gone up, but it is above the peak, yeah.
So you brought some slides to walk us through this issue. It's the next one.
Yeah. Let's see.
Affordability crisis.
Yeah, so here's home price growth. And again, you can see how wages have gone up, but home prices have gone up so much faster and are way above the peak, especially when you compare it to wage growth. So this is what I'm talking about, where if you're looking to buy a home and you finally get to a place where you're earning more, it doesn't really matter because home prices have gone up so much since then.
And we're not just talking about Washington, which is a hot market, but across the country.
It is happening across the country, some places more than others. We've actually looked into where can people still afford homes. And in the center of the country, home ownership is still attainable for a lot of people who make the median income. But in places like DC, New York, San Francisco, Los Angeles, where a lot of people want to work because there are a lot of good jobs there, home ownership is really unattainable.
Now, let's go on to the homeowners staying put. I think that's your next slide. Yes.
So the previous panel talked about this a bit, about how as Americans age and technology is improving and people want to stay in their homes longer, there are all these great options for older Americans to stay where they are, and they're taking advantage of that. The average length staying in the same home has gone from, around 7 years in 2010 to about 14 years currently. And what's happening is that since there haven't been new homes built, the fact that an older American stays in their home much longer means that younger Americans are having an even harder time finding that first home. And sometimes the home that an older American may be living in is designed for a young family. Like the home that I bought, it was built in 1953 and only had one previous owner. So the person stayed in their entire life, but it's actually a home that's perfect for a young family, has 3 bedrooms, has access to parks and schools. So there is this kind of misallocation. But the root problem is that there aren't enough homes for everyone who wants them. If there were enough homes, if there were new homes being built, we wouldn't have this tension of people staying put, meaning that younger people can't get into homes.
So it seems like what you're describing is a perfect storm of a housing crisis. We have this large generation coming into the prime home buying years, but facing all sorts of obstacles. Is there any other solution other than just building more housing?
I think the long-term solution does need to be to build more housing because it's just like a simple math problem. If there have to be more homes, if there aren't enough homes for people who want them. But another part of this problem is who has access to these homes. We've had growing wealth inequality, and home ownership can exacerbate that. The people who are able to get that first home, maybe they have parents who are homeowners who are able to tap their home equity and pass that down and help them out with their down payment. But not everyone is fortunate enough to have wealthy parents and get that kind of help. So there are ways that we can level the playing field, redistribute wealth. Some presidential candidates have proposed policies like rent relief. So that would give a credit to people who pay more than a third of their income towards their rent to help them out. Because if you pay more than a third of your income towards your rent, it's nearly impossible to save for a down payment. And there are other programs like down payment assistance, and also just putting more resources into neighborhoods that may be disadvantaged, like previously redlined neighborhoods. Those have been brought up. And also student debt relief. That's a big issue for millennials. If you have student debt that you're still paying off, it can be really daunting to take on more debt through a mortgage.
Right. Well, I want to remind the audience that we'll be coming to you for your questions in just a moment. We talked a bit earlier about the decline specifically in Black home ownership and the negative impact that has on wealth building overall. Redfin just released a new report on this topic. What did you find?
So we found that in many metros in America, it's nearly impossible for a Black family making the median income for a Black family to afford a home. In places like San Francisco, New York, DC, Los Angeles, it's like less than 10% of homes that are affordable to a Black family making the median income. There are some places that did better. They tended to be in the South. But when you think about where are you going to have the best economic opportunity, they don't line up with where you're actually able to afford a home. And that disparity is really big between the races. And part of that does go back to historical policies. And just the fact that Black families make less money than white families means that they're less able to build wealth through home equity.
I think I saw the worst city was San Francisco. Francisco.
Yes.
With less than 1% of the housing stock being affordable to the typical black family.
Yeah, and you can see how that can really exacerbate access to jobs. I mean, San Francisco is this huge tech center, and there are all these initiatives to get more young black people into tech. But how can a young black person feel comfortable moving to a city where there aren't other black people who can afford to live there? It kind of has this barrier that is not talked about where how can you feel comfortable in a neighborhood that isn't affordable to people like you?
Right. It's not so easy as just moving where the jobs are.
Right.
If the housing isn't there.
Yeah, and if you can't bring your family, another issue with housing is childcare. How can you afford a home and also afford to put your kids into childcare? And one big advantage is living near your family. So if the rest of your family can't afford to live in the same neighborhood that you want to live in where they're the best job opportunities, that can be another barrier to living in the neighborhood where you have the best economic opportunity.
And this is the kind of thing that would exacerbate racial inequality for decades to come if home ownership is the primary way that Americans build wealth, and certain people are just finding themselves shut out of that. The road ahead doesn't look very rosy.
No, it doesn't. But there are policies that can be put in place. I mean, we talked about increasing the housing supply just to make it so that there are enough homes for everybody who wants to buy them. But then there are other ways where we can reduce inequality just at a more broad level that would make it so that people can afford to own the homes that they want to.
Now, we've all heard rumblings of a recession. Just wondering what would happen in the housing market under that scenario, and how can aspiring homeowners prepare?
So I think a lot of people have the last recession in mind when they think of what would happen to the housing market, but the last recession was pretty unique. It started in the housing market. We had this housing bubble that popped, and people didn't have much equity in their homes at the time because the lending standards were loose and you could take out, nearly all of your equity and not have any cushion. Nowadays, that's not true. People have much more equity in their homes and lending standards have tightened. So if there were to be a recession, first of all, I don't think it would happen in the housing market. I don't think it would start in the housing market. I think the reason that home prices are so high right now is because of fundamental economic reasons like a lack of supply. And the way it would impact the housing market wouldn't be as big because people have that cushion. People would probably hold on to their homes, weather the storm. They wouldn't flood the market with more inventory. And I've heard a lot of people say, when the next recession happens, that's when I'm going to buy a home. But if everybody's thinking that way, that means demand probably isn't going to weaken that much. There's still all this pent-up demand for homes, whether or not we're in a recession. So I think the effect would be much more muted. And that's actually in line with historical recessions. In the 2001 tech bubble, home prices kept going up during the recession. And in previous recessions, home prices only fell by like 5 or 6%, not the 17% price decline that happened during the Great Recession.
And the foreclosure crisis that accompanied it.
Right,
We're not talking about anything close to that.
And I'm talking about this broadly, nationally. There may be pockets of America that are hit harder than others. And we actually did an analysis of which markets would be hit the hardest, looking at where do people not have much equity in their homes? Where is a market really concentrated in one industry or reliant on exports? A lot of people seem to think that the recession will start abroad because there's already global weakness. Okay. And if you have a metro that's really dependent on exports, maybe they'll be hit hardest. And also price volatility. So if a prices in your neighborhood swing up and then swing back down, a swing down would probably hit you harder. It was Riverside and Phoenix and Miami that we think would be hit the hardest, where places like Buffalo and Rochester and Dayton, Ohio, they would actually probably keep on a steady track because their home prices are very steady and they're not very susceptible to these factors.
What about Washington, D.C.? Just curious.
Washington, D.C. was in the middle of the pack. It wasn't a high risk or a low risk.
Okay, I'm going to give the audience a chance to ask something right here in the front. Yes.
Thank you. Hi, my name is Andrew Abramowitz. I work at HUD. I just had a question regarding the American public perception, their views on home ownership. Because growing up, I saw people viewed it more as a social status opportunity, and I think that's somewhat changed. I see it more, especially when I bought my first home, it was more of a financial stability reason and independence. And a lot of people, my peers, don't want to buy these days because not just for down payment reasons, but they don't, the reason of social status doesn't appeal to them. Has there been a change in that mentality, that motivation of home ownership that may affect the ability for people to purchase?
Yes, we've surveyed home buyers at all different ages, and it seems like they still view home ownership as being a step towards being secure in their life, and maybe it's because of the financial security, like it's just a step into adulthood, but it's also aspirational. If your parents were homeowners, it's a step that you want to take. I do think, though, that since there is less and less housing available for everybody who wants it, it becomes even more of like a pie in the sky dream, and maybe you're going to look at other ways to become financially secure, like paying off your student debt or owning your car outright to feel that security, other than home ownership. But I think a lot of people that I've talked to that live in some of these expensive metros have seen their rents go up year after year. They see that there's no end in sight, so they still want to own a home just so they can have some security around how much they're going to pay every year and be able to plan and not be at the whims of their landlords.
Right. Do we have another question? Yes.
Yeah, Irv Katz from, Irv Katz from Generations United. I wanted to see if you have any data indicating a trend relative to home sharing as a cost-effective way of people getting housing, affordable housing.
It's another thing we've surveyed people on, and for a while it looked like more and more people were looking at alternative living situations as a way to become homeowners, buying homes with friends as opposed to a spouse. The marriage rate has been going down, and so is the birth rate, and if people want to still become homeowners before they make that step to become married, they may find alternate living situations. But most recently, that trend has actually come down for millennials. We're seeing more millennials take the traditional route towards homeownership, just saving for the down payment themselves and buying the home themselves. And that might just be because we're in the longest economic expansion and they're finally starting to feel secure. So I think that as millennials start to age and progress in life, they'll probably do less of those arrangements. But I think it is a trend that's probably here to stay for a portion of people.
Okay, one more from the audience.
Hello, I'm Susan Kimmel with Homes Renewed. And my question is about the urban versus suburban split and how that affects different segments of the population. Particularly, we're very interested in how to help seniors age in place, but in a suburban environment, it poses many challenges that are different than urban. And home ownership for millennials is very different if they want to be in the cities. So I just wondered if your take on that.
Yeah, so for the longest time, walkable neighborhoods have been the most desirable neighborhoods. And when we looked at who is staying in their home the longest, we broke it out by walkable neighborhoods versus less walkable neighborhoods. And it was the walkable neighborhoods where people are staying in place the longest, which makes sense, right? Because if you already have access to shops, to your pharmacy, to your social life, then you're going to be more likely to stay put. Whereas if you're out on the outskirts of town, you have to get in your car every time you want to go somewhere, that's going to motivate you more to move. One of the biggest barriers for people in terms of moving is that they don't know where they're going to move if they were to sell their home. So if you're an older person and you live in the suburbs and you want to buy a house or a condo, like a smaller house in the city center, you may not be able to do that because it's so unaffordable there because the way that prices have changed. And we're seeing more and more that people are moving out to the outskirts of town to find that affordable home, which isn't great from an environmental perspective because the farther you are away from your job and the longer you have to commute, the worse that is for the environment. And it really speaks to how cities and governments need to plan and build that dense housing where people actually work or near public transit as part of their long-term strategy for building a livable green city.
Did I miss one question over here? Yes, one in the back. Someone's got a hand up.
Hi, my name is Rhea Vaflor, and I'm with Hickok Cole. We're a design architect consultancy. And just a question, why are we not seeing more condos and multifamily as an option? Just, it's interesting because I live in the DC region, and you're seeing so many older people staying in place, which is great, but that's like the first time home buyer stock that's not there. So what are the factors that are kind of pushing that, and we're not seeing more condos that are available for first time home buyers?
there's a lot of resistance to building dense housing. We surveyed home buyers and home sellers, and the majority of them were actually against dense housing, and it's pretty counterintuitive because they say that they feel like home prices going up have really been a burden to them, but at the same time, one of the solutions to that, they're pretty resistant to. And then local governments have a lot of challenges too. Homeowners, if you're a homeowner, you kind of have this vested interest in keeping your home value as high as possible, and I think some people view competition as a threat. Like if there's more multifamily units, maybe my home won't go up as value as much, or if a big unit goes up, I'm worried that there's going to be some shadow that blocks my view, or there's a whole array of reasons of why homeowners are resistant to dense housing. But I think that there is a very big role here for government to play and kind of be the people or the group that's thinking long term and really planning for future citizens, not just people of today, because if you don't plan and think ahead about your housing, you're going to be in an even worse situation a couple of years down the road or decades down the road.
Redfin just released an interesting survey about home buying and political identity.
Yes.
What did you find?
So we asked homeowners 2 different questions. One was, how comfortable would you be living in a neighborhood where people didn't share your ethnic identity? And we also asked people how comfortable you would be living in an area where people don't share your political identity. And it was surprising, at least to me, to find that people were more resistant to living with people who share different political identities than they were different ethnic identities. Yeah, I think that really speaks to where we are as a country. But also, it kind of makes sense because the way that people vote in your area can really affect the lifestyle you're able to have. If you live in an area where, for example, let's say weed is illegal and you enjoy smoking weed, then you wouldn't want to live in that area if people don't share that same political ideology. And on the other hand, if you are a gun owner, you wouldn't want to live somewhere where people are voting to outlaw guns. So it makes sense, but it just, I think, speaks to how divided we are as a country and how we really aren't on the same page about where we want to be moving forward.
All right. One last question from the audience. Right
Hi.
here.
Deb Pierce, architect and author. The thing we're not talking about is transportation and the connection between public transportation and housing. I just want to notice that, because when we talk about livable communities, the conversation has been around walkability. So maybe that's another conference.
I think it's very tied, and there was an interesting legislation put forward in California to increase dense housing near public transit. It didn't pass this year, but maybe it'll pass in another year. But that's another way to reduce the carbon footprint, allow people to get to work using public transit, but also increase the affordability, not just in terms of having these multifamily units near not just in terms of having more multifamily units, but having those units in places where you don't have to own a car. Because if you're also paying for a car and gas, that makes it even less affordable to live in that place.
We could talk about it all day. So many interesting issues, but we have to leave it right there. Thank you very much, Daryl.
Thank you.
For joining us today.
That's a wrap. Thank you, Daryl Fairweather and Susan Solney. Home matters, and so does where you live. That theme clearly coursed through the day, and every conversation that we had, whether it was about the rental revolution or housing discrimination or aging in the right place. I hope that you all learned something new today and feel challenged and invigorated by the conversations you heard and the people you met. Before you dash out the door, I do want to give another thanks to Genworth for making this conversation possible. Let's give them a hand. One last request from me to you. You'll get an email from me momentarily asking you for your feedback. It matters a lot to us, so please take a minute to fill that out, or there's hard copies in the room if that's easier. You've been a wonderful, very, very smart audience. I know how precious your time is, so thank you for spending so much time with us, and have a wonderful rest of the day. Thank you.